Hi guys, Peter Bland here, hope you're really well. Just giving you a quick update on the trial that I've offered to people with regard to our trading program on Tuesday the 13th of May. We've only got 3 days to go until the end of the month, and I thought I'd give you an update on each actual position, how they're travelling and how much you could have made if you'd been on board with our education, and how you can apply this to you beyond money. What does this really mean for you? So the leadership group, of which I'm the founder, teaches leadership in 3 areas: mindset, money and adventure. Mindset, because it's about getting your mindset right about who you are as a person, irrespective of the story you may have had in the past, what your future looks like for you, not some story that somebody else may have imposed upon you. So what is congruent to you? Money is important because if you haven't got the money, unfortunately, it's very hard to go off and actually live that truth. You can live the truth if it's a very modest application of your truth, or if it's a very selfish application, it doesn't really require you to help others. But if you really want to have a higher purpose, contribution to others, and you want to have a pretty awesome time, then often it requires money. So the trouble is, most people's way of making money requires a lot of time, and that can get in the way of living your truth, which is kind of this whole oxymoron that people face time and time again. So my message to those through leadership is that leadership mindset is about getting your truth of who you are, irrespective of the past, applying it to the future with an abundance of money and time. And I would hope that you can come on awesome adventures with us, like we're heading off to Antarctica this December on a world-first Indigenous leadership program on the ice in Antarctica. So I hope you can come with us on that. It's great to have it as a goal anyway, if not this year, maybe next year. To have the time and the money provides a mechanism through which you can do that. Let me just give you a quick update. So what we want to get working for you, so you can actually apply this, is to have the magical compound interest working for you, what Einstein called the 8th wonder of the world. Now, the trouble is, most people, it's a big generalization, I know, but a lot of people don't have enough investment money coming in for them, so that they're really more stuck on a linear model. And a linear model is where you're swapping time for money, time for money, time for money. And it can be fairly arduous process. A person says, I'll give you 10 hours, please give me $100. I want $1,000, give me 100 hours. Well, I need more money. Well, give me more time. And we've seen it time and time again in relationships, in your own health, in your your cholesterol, your cardiovascular system. All these parts of you get put under pressure, not so within your health and then within your relationship. So sometimes this linear model kind of doesn't work that well because we're pushed for time because there isn't enough of it, and there only is what there is, yet our desires go beyond what we can actually provide with our job. So we need to get investments working for us, okay, and that's where we kick in to get this magic of compound interest working for you. Okay, I'm just going to cut straight to the results, and this is just a quick update for members who are trying the program. We've averaged 46% return on the capital for a total of every recommendation we've given for the last 2 years, and that's pretty impressive. 46% return on capital, and that's not just, well, it's impressive, full stop. And in addition to that, it's a cash return. It's not just a bricks and mortar growing up in value, which is a great way to grow equity, but it's also a cash return that you receive, instantly, which is particularly attractive. So to give you an example, if a person started trading with $5,000 and they continually made what we're making, which is between 3 and 4% per month, well, that would be actually $299,000 in 10 years' time if they compounded it. Or, of course, with $10,000, that'd be just under $600,000, or $20,000, $1.2 million. And a lot of my members trade with a lot more than that. But starting with those numbers is pretty good because it gets you going, gets your confidence growing, and that's super, super important. So let me explain to you in quick terms how it is that we create this return. So let me ask you, do you have house insurance? Okay, or do you know somebody has house insurance? So of course, more often than not, the answer is yes. Okay, terrific. So when did you pay the premium? Did you pay the premium at the beginning of the period, at the end of the period? Now, of course, the answer is you pay for it at the beginning of the period. Okay. Now, did you make a major claim against that insurance last year? More often than than not, the answer is no. Therefore, it makes you question, what happened to my premium? Well, the premium was received by the insurance company. They actually traded with that premium you received, which is called the float, and they made money with that. But did they give you any more money back on that? No. Did you make a claim against it? No. Did you go back to them and say, can I have my money back? No. Okay, you're starting to see that being an insurance company, as long as you have all of the rules of a good insurance company, which I'll cover in a second, can be a really good business. So let's talk about those rules, because that's what we're actually going to teach you how to do. I'm going to teach you how to be an insurance company to the US stock market and receive premiums up front. Okay, and you can see there's some pretty big companies here in Australia and New Zealand turning over $43 billion in industry revenue last year in the insurance industry. So it's a big business. Okay, so if you're the CEO of a very successful conservative insurance company, what would you tell a young salesman who is going out to write new positions? Well, you talk about things like fair risk-return relationships, so that if you're going to insure an asset in a high-risk area, then you want to receive a high premium. And if you're going to insure an asset in a low-risk area, then you'd be happy to receive a lower premium. And that's a fair risk-return relationship. Okay? Only write policies on good houses. Now, it's not just houses they insure. You only write good policies on good assets, as in the asset is worth what they say that's worth, and you insure it according, and you receive a premium according to the value of the asset. That's another one of our rules we apply. We make sure the client can pay. That's very important. You diversify across stocks, and you diversify across suburbs. So these sound like some pretty good rules that an insurance company would do. Now, it's not insurance what we're doing, but it's a very good metaphor, and I use it as a mechanism for teaching you what we do. Essentially what we do is we sell an insurance policy to the US stock market, and we receive a premium up front for doing it, and the return that me and my members are making month in, month out is between 3 to 4% per month, which is pretty impressive when you consider the banks. You'd be doing well to make 4% per year at the banks. Okay, so many say the passive option or Lucky Life Trader is the safest strategy on the market. Why? Because we get paid to wait to buy a blue chip uptrending S&P 500 stock at a discount, and guess what? We rarely buy them. Okay, so let me just show you. If the market comes down, we make a profit. If the market goes up, we make a profit. If the market comes down slightly, we make a profit. And if it goes straight sideways, we still make a profit. And I can teach you the fifth way, which is if the market completely drops, I can show you again how we can make money in that scenario as well. Okay, so prove it. So I thought it was appropriate for me to prove it to you with real live trades which have been given to trial members this month. So let me just cut across to those. So the actual recommendations that were given to members at the beginning of this month were as follows. These ones here. I'll just colour in a yellow column here. What we said, these particular companies are an example. UAL, we said, write an insurance policy at 40 and you'll be paid up front for doing that. So in this example here, a person received $152 for doing that. Okay, write one for Amazon at $285, and then for this particular one you received $210. For TNA, right at 66, and you receive $140. So all these little bits add up. And to just give you an example, I mean, this was written back on the 23rd of April, these recommendations were given, and they've been up on the website for you to look at, and I'm giving you an update today, 13th of May. So if a person on this example, and it's just an example, had written these, they would have needed to have about 37 grand in their trading account, and if they'd had that, then they would have made a 4% return on their capital in this month. And this is me saying this to you now on Tuesday, and we've got 3 more days to go. So let's have a look at exactly how these trades have gone since we wrote them. So these are the positions that we wrote back then on the 23rd of April for this month going ahead, which we're almost at the end of it. So I've written down those strikes, which are the numbers in the yellow column there, and that's the price which we made a promise to buy these stocks should they come down to that level. Very much like for the person who bought what we sold, it's very much like an insurance policy. So let's go have a look at online right now on how these trades have gone. So there's a website that I use called finviz.com. It's free, it's awesome. And I'm going to use a function here which is pretty cool. It allows us to draw pictures on here, and hopefully it explains to you really well what we do. So we wrote a position back here in 23rd of April, about here, and we said, okay, we're going to write an insurance policy on a stock called Amazon, and we wrote Amazon at 285, and we wrote it for 1 month. So we're just 3 days to go to the end of this month, so I'll draw that line there. So that bit there, that's called time. Great. Now, for that time, what did we insure it at? We insured it at 285, so that's 280, that's 300. So 285 would be about there. Okay, great. That's where we wrote our promise. So let me just type in what it is that we've done. This bit here, that's called time, and time always equals 1 month. Great. Now this line here that we wrote here, that's called your strike. Okay, and that is equal to your quote promise, and it's the promise that we would buy the stock if it came down to that. Done. That's it. It's a promise for which we are paid a premium up front. You can see how it's very similar to insurance, okay? Now this bit in between here is called your buffer. And the buffer, always when we start, always needs to be greater than 10%. So now in a snapshot you can see very clearly. So let's have a look at this, Amazon. Now quite clearly Amazon has come against us. In fact, when we wrote that position for Amazon, it was worth about $340, $338. And then during the month of April going to May, it has fallen almost $30 or more than $30 actually, and it's fallen down to $302. In fact, it fell a bit lower. It fell down to the the 287-ish. It looks like that right there. The point is, the stock has plummeted $30, and we are not at all concerned because the promise we made was that if Amazon came down to 285, is that what we said? 285, then we would buy it. Okay, great. Has it come down to that low? No, it hasn't. Are we that worried even if it did? No, not at all. So what I want to get really clear to you is that we get paid a premium up front for writing a promise to buy a blue chip uptrending stock at a discount. Okay, and when we do buy them, we're sometimes really happy to buy them because we get them at a real discount. So let me just whiz through a summary now of the different positions that we wrote. So another one on that list was BIDU. BIDU we were at 140. So you can see as I scroll here now, you can see that's everything's in place. The time is the same. The strike is relative, so this one here is 140, we wrote that out. The buffer you can see has been maintained, the buffer is 10%. And during the month of April going to May, it's gone up, it's come down, and there it is still up. And we don't worry, in fact it's going to end up trading about where it started, about 159. But we didn't get worried about it going up and down, we just made a promise and we'll pay it up front. CELG we made a promise at 130. So there's our promise for that. Again, nice big buffer there. Guild, we made a promise for that at 62.50. So there's 62.50. You can see that, and it's charged away. It's gone from 73. It's charged up to 180. I'm sorry, to 80. So it's gone up $7. Now we don't worry about that. We don't ride the upside of what the stock does, but equally we're not riding the downside because it's staying above our promise. JNPR, we wrote that at 23. So this is a real live update as of the 13th of May, okay, for these positions which were given. Did I say the 13th of May? Yeah, which were given on the 23rd of April. JNPR 23, there it is. You can see it's above. TNA's come against us. 66, we wrote that. Okay, and there we go, good example. So during the month, it's obviously come through the strike. No big deal. We've let it come through. It's popped back up because they're uptrending good S&P 500 stocks. Enormous pressure comes upon them to go back up when they come down that low. TSLA, I know that's come against us and doesn't matter. We wrote that at 160 from recollection. TSLA 160. What have I done here? Yeah, 160. So cool, we got that. It's above. UAL, we got that at 40. Okay, so that's come against us, and still it's above 41.58. And so it goes on. And X, we wrote that at 24. So again, well above the strike there. So that was me giving you a quick update on how each of these trades, which I recommended a month ago, have gone. And the point of the story is, for each position that you wrote there, you put up a little bit of money called a margin, which is this bit here. In this case, it's $2,000. By putting up that $2,000 as a margin, you received $152 on that one. Next one, you put up $3,000 and you received $210. Next one, $2,200 and you received $140. If you add up all these little bits that are going on along here, you can see that in total, this person used $22,000 as margin. They received $1,300, which is a 6% return on capital. I actually teach people to really include all of their capital when they're working out their average, because we don't trade with all our money. We keep it much more conservative. We keep at least 50% in reserve. So if you calculate that, if you keep 40% reserve here, you can see this person has made 4% return on capital. It's a phenomenal return, and it's real life results, because here we are looking at it with only 3 days to go, and they're all looking really, really good. Okay, and if you've got any questions as to what to do with the position when it comes through the strike, then that's also covered in the education that we provide for you. Okay, and this is just a quick update for you. So going back to where we started, so proving it. Okay, we've done that. Current members include all of these people, and I can happily put you in touch with these people by way of testimonial. They're super happy. Many people who have been trading with me for 2-3 years are now buying property with me. They're coming to Antarctica with me. There's a photo, just quick little examples. There's Steve. I was over in Nelson, New Zealand with him a couple of weeks ago. Steve's gone ahead and bought a property in a syndicate, the property I put him into. He'll make about 92 grand after settlement with that property, and with that, trading with it, he'll make an additional 2.5 grand in his trading account. So Andreas, he'll make an additional 2,800 per month just with the equity he's making from the property that I've got him into. Marianne and Robert, an additional $4,300. Heaps of examples. Luke, Ianthe, Nicholas. I can put you in touch with these people. Steve Rowland. Actually, Steve actually made $7,000 last month trading. Super happy. Bill, same. He'll make an additional $4,700 trading with me just from the equity from the property that I've got him into. So you don't have to, get property to do this at all. So getting trading is an awesome way for you to get going with your financial blueprint for your future, because it gives you the confidence that you're getting a regular cash flow. The time is within your power, because it only takes a fraction. It takes minutes to put trades on, and you've got the rest of your day. That's Beatrice. In fact, that photo was taken on the back of this yacht. This is my little yacht here down at St Kilda. Love going out sailing after I pick up the kids from school. And myself, I bought two apartments in this recent development, and I'll make an additional, on top of what I already make, I'll make an additional $5,700 just from the equity from the two properties I just bought. So you can see how important it is to get the magical compound interest working for you, and this quick education has been an update on how those positions that I recommended this month have been going. And by getting compound interest working for you, it gives you time, and with time you can go and do awesome things. Personally, I was recently in New Zealand. I pick up my kids every day from school. We often go sailing on this yacht. I'm very actively involved in the kids' football and camping, holidays. Off to Antarctica this December, taking 8 Indigenous students from Outback Australia, ice climbing, camping, and kayaking in Antarctica on an awesome leadership program. All this requires time. And all of this time was made available to me because I invested in mindset, money, and then able to do all these awesome adventures with people that I really care about. So getting you started, the program is fantastic. The structure of the education is such that it takes you through at a fundamental level to get the education right, and as you go through that, then you know enough to go forward into right positions. I help you to put those positions on. I'm going to talk you through what's included. So you get the education program, and the education covers these topics: opening up your account, company selection, yield versus buffer, USA versus Australia, do we buy puts or stop losses, do we open a virtual account, defining options, comparing strategies, is this a risky or really conservative strategy, managing your positions, timing and investing, and then we give you real life examples with Caroline and Joy and Eric and Lynette and Craig and Glenn, all really good examples of actual recordings of putting first trades on. We talk about margin requirements, we talk about diversification, we talk about putting your trades on, okay, and modifying your orders. So all this is covered in your education. An absolute promise that you will be so happy with the education you get that you'll then go live, and I help you to go live with your trading. And you also get, so you'll have me as a personal educator, as a coach to get you going. You also get recommendations, and the recommendations are fantastic. You get them at the beginning of the month, and that's just like those ones you just got there. And then that's all you need to get you through the month with your positions. And then at the end of the month, you just manage them if need be, or you just let them be. And what happens at the end of the month, the positions you wrote just expire. You keep the premium, and then you're set to go for the next month, okay? We have webinars every second Wednesday. Our members come together, they chit-chat, they talk to each other, they compare how things are going. And we talk about things which go beyond, just trading. We talk about application of this money, which is, far more important, really. You'll also get a copy of my book and my 3 documentaries, and it's about you getting to know me as a coach and helping you to get started. The recommendations are normally $2.99 a month. However, I'm going to show you something I've made up, an order form for you here to get you started. So for those people who have trialled the application of the trial program that I've started for you this month, you're going to get all the education I've just covered in there. Okay. And you can actually pay for it in full, which is $4,999, or you can pay for it over 6 months. It's completely up to you. There's a little bit of interest built into that. And the monthly service for the recommendations is $199 a month. So that's it. It's a flat fee, and for that you get the ongoing support and the recommendations. And the promise is that the recommendations will always be sufficient for you to have your account actively trading for you. Okay, so in summary, this has been an update, just updating you on the actual recommendations which were given a month ago, how they're trading now as of the 13th of May with 3 days to go. And I will send you this video now. I'll make contact with you via phone on Monday or Tuesday next week to get you started. And the big thing with investing is it's not about timing the market, it's about time in the market. So the earlier we can get you started with the program, the earlier we can get you educated, the earlier we can get you trading live, and the earlier you can start making significant returns and significantly applying that into your lifestyle, which I would hope is buying back time so you can spend that time doing quality things with those people you really wish to. Okay, so thank you very much for watching this video, and it'd be great to have you on board with to being a full-time trader with me, applying the knowledge we teach you, and hopefully coming on some awesome trips in the future. All the best.